The other thing is commercial paper, which is a short-term IOU that a corporation will issue for purposes of funding their daily business, is up $38 billion. Sorry, $58 billion in the past 3 weeks.
Credit creation.
That is the most since May of '06.
And did you know, let me take that point and bring Don Luskin in. Don, one of Laffer's other points that was real interesting to me, the narrowest money supply, M1, over the last 3 months is growing at 10% at an annual rate. The monetary base is also growing at 10%. Now, I'm not going to use that as an inflation thing. Art Laffer said it shows the demand for money is picking up just as the dollar is rising, just as the economy is getting stronger, and just as I think we are headed into a gale force stock market boom. So the money, and Vince mentioned the pickup in commercial paper, C&I loans are still positive, Don. Doesn't this sort of really undercut this credit collapse argument, which I think is driving through the rear view mirror, not the front view mirror?
Absolutely. This idea that we've had a credit collapse is certainly true if your benchmark for the amount of credit that ought to be out there in the world is the infinite amount of credit that was coming out during the peak of the subprime craziness. So that's like saying that you don't think we're ever going to be in a bull market in stocks until the NASDAQ hits 5,000 again. That is too high a bar. We have, in most ways, a perfectly reasonable credit situation right now. It's just that a lot of people are wringing their hands because the way they got used to making a lot of money 2 or 3 years ago isn't available to them anymore. So they have to go back to the good old-fashioned blocking and tackling of lending money to people who can actually pay it back, heaven forfend. And so we're not in any kind of
But under pretty favorable interest rate conditions. Don, I want to get your investment strategy. You know, you go down the list. Banks did great today. Merrill, Lehman, Morgan, Goldman all did good. Citibank did good. Bank of America, MBIA did very well today. Insurers did well. But also, Don, retailers do well as oil stays low. That solves consumers. Industrial machinery, not surprisingly, also did well. Don, give us a quick thinking on your investment strategy. Can this bull market move continue?
Oh, it most certainly can. Stocks are ridiculously undervalued. The pessimism is so thick, they've just got to go up, and they will. I do urge caution in the financial sector. It's a great recovery play, a great distress play, but in the end, don't forget, the benchmark that these companies have is the subprime craziness of 2 years ago. They do not have an alternate business plan. They're going to do fine. They're not going to zero, but they're not the growth story today that they were coming out of the S&L crisis. I think the growth, if you want to find a beaten-up sector that you can play reliably for the intermediate term, you ought to be looking at basic materials stocks. Those have been punished mercilessly because they've fallen as the oil price has fallen. Oil's been in a bubble. Other commodities have not really. So just because the oil bubble has popped doesn't mean that metals, fertilizers, papers, foods, all the other commodities ought to pop along with it. So you got to get into those stocks that have been just destroyed for no reason.
What do you think of that, Vince Farrell? That's a very broad-based, positive investment strategy. What do you think of that?
I don't go against Don Luskin ever. He's a pretty smart guy. But let me add something to it, because the lower oil prices are going to reinvigorate economies around the world, Larry. So I like the basic infrastructure play. The dollar, I think, got to be about 30% undervalued, so it's going to be a long, long time before we lose an export edge, if indeed it was currency only, which I don't think it is. So I like the companies that export the infrastructure that all these nations use, plus that do the infrastructure that we so desperately need in the United States. A stock, to me, and I own this personally, is like a General Electric that kind of covers the whole broad base, and, by the way, has a 4.25% dividend yield against a 3.8% 10-year Treasury.
Our parent network, I must say. But
your parent, not mine, I can say it.
My parent network. Now, let me say, before we lose you, we're going to swap out a little bit. Better growth, to me, says the Federal Reserve is going to raise its Fed funds target rate sooner now than people think. That's good. That's going to boost the dollar. That's good. That's going to lower oil prices down to $80 a barrel, where it ought to be, plus drilling. That's good, and that's a boom for the stock market. And in other words, I'm saying good news plays into good news. This is a game changer today, 3-point. Even if we're going a path at 2.5% GDP, this gives the Fed the running room to make the adjustments they need to stop the cheap money. The dollar is going to soar in real terms and nominal terms. Oil's going to fall, and stocks and the economy are going to really rip along.
One quick add-on to that, because we are much further along in solving our issues than Europe is. Our next move in interest rates is up, which supports the dollar. Their next move in interest rates is down to stimulate the economy. I think the dollar is going to go much, much higher.
Yeah, take that, Quentin Hardy. Take that.
You guys weren't listening. All I said was Bernanke walked a tightrope and delivered a great second quarter, which he needed.
Quentin,
if he strengthens the dollar now, he went one way and the other way.
How about the third and fourth quarters, and the first quarter and the second quarter of next year? University of Michigan Forecasting Service, which is very distinguished, is looking for 3% growth in the next year.
That may be so. I hope he's right and the Chamber of Commerce is wrong. You know, last time I was on this show, Larry, Don Luskin on his blog the next day insulted me and denigrated me in dishonest ways. But I'm still going to agree with him for the most part on what he says.
Ah, so Mr. Luskin's the winner. Mr. Luskin's the winner.
No, he's dishonest,
Oh, goodness
actually.
gracious. Okay, Quentin, I'll put up a blog posting later today linking to my previous blog posting and let the viewers decide who was honest.
All right, gentlemen, I appreciate it.
I sent you an email, Don. You didn't read it.
All right, hang on.
You never sent it.
We'll work that all out.
Not
We
true.
welcome all the contributions. I love all of you. Let's see. Quentin's going to stay. Jerry's going to stay. Don Luskin, thank you ever so much. Vince Farrell, thank you. You sound